Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. Today, we want to talk to Consolidated Uranium. Yes, you heard correct. It's no longer International Consolidated. Now it's Consolidated Uranium. And Phil Williams, the CEO, is here live with us from Canada. Good morning to Canada. How are you doing, Phil?
I'm well, Jochen. How are you?
Perfect. Thank you very much. We still have some sunshine here. That's great. And I would say, even as fine as the sunshine is, the uranium price is over $40 per pound in the spot. And I think we are both excited on that, right?
Very excited. It's finally making the move that we thought it was going to.
Yeah, absolutely. We waited a long time for that because we saw it already 2-3 years ago, I would say. But now things are really progressing, and we saw it also with your share price. I think your share price appreciated the last 2 weeks easily by 40-50%. And yeah, that's fantastic, of course, for you, but there's also a reason why your share price, aside of the uranium price, appreciated, because you guys closed the acquisition of the high-grade Matoush uranium project in Quebec, and you did a deal with Energy Fuels. Maybe we should start with Matoush. So what have you closed there? Why was it so important for your company?
Sure. Thanks, Jochen. Yeah, we've been very busy, and just to talk briefly about the uranium move that we're having. I mean, as you said, we've been waiting for it, and Consolidated Uranium was purposely built to take advantage of that coming bull market for the uranium prices. And this whole strategy has been acquiring these sort of out of favor, forgotten projects. And the latest two deals, and so we've been very busy since we first started talking about the company, which was over a year ago now. We've now acquired or have options to acquire over 12 projects around the world. The latest one that we closed, as you point out, is Matoush, which is a very exciting project for us. In the previous bull market, it was one of the marquee uranium development assets. There was over $100 million spent on it. A significantly high-grade resource was delineated on the project. In fact, it ranks the second highest grade indicated resource outside of the Athabasca Basin. And of course, the company that owned it at the time was one of the high flyers in the uranium bull market. Fast forward, we were able to acquire the project out of bankruptcy. As you point out, we closed on it in sort of mid-August. And it's a two-staged process where we closed, we made some initial payments, and there's some future payments in 6 months to complete the acquisition, but now it's ours on a 100% basis. And so it's very exciting to have such a high quality, high grade, large resource project in our portfolio. And it will become one of the focuses for the business going forward.
Yeah, that's exactly would be my next question here on the focus, because we see there is a lot of uranium already contained into that, and you have a historical resource estimate. So what would be for you the next steps? Do you want to explore that completely, bring it into a, let's say, a production ready state? Could you imagine to partner with somebody? Because it really looks like we need much more uranium in the future here, because a lot of nuclear power plants are built, and through e-mobility, we need a lot of energy.
Yeah, so we look at it two ways, Jochen. And when we first closed the acquisition, and the uranium market was still relatively quiet and hadn't been having the moves that it's been having of late, our idea was we were just going to wait to see where the market would go in order to make any decisions on how to move the project forward. One thing I would like to highlight specifically on that project is we need to get social acceptance to move that project forward. And this is not something new in the uranium space. Every project has issues and potential issues and things, and needs to sort out its social license to operate. And that's true in any commodity, but particularly for uranium, you have to get the local support there. So our first priority with the project is to engage with particularly the indigenous population and discuss the merits of the project, educate, listen, and talk to the locals about what they see there. Ultimately, where we think this project can go is we think it has a huge upsize on resource expansion. So when the previous group drilled it off, they drilled it from surface. The opportunity to go underground and extend the deposit along strike, and there's 12 kilometers of strike potential there. I think that's the job one would be to say, okay, what would be the ultimate potential size of this project, and then figure out a development scenario from there.
Fantastic. And as it is in Quebec, I could imagine the infrastructure situation is probably very good.
It's good. So it's on. There's a road in the north of the province where the project is that goes right past the project, and there are other mines on that road. In fact, at the end of that road to the north is the Renard Diamond Mine, which was put into production several years ago, and they send trucks right past the Matoush project on the way up to that mine. So lots of good access to infrastructure for mining.
Fantastic. So for you, very favorable to develop once you would go into that step. That's fantastic. But what I also liked with your company, and that was in the mid of July, that you entered into a, I would say into acquisition and strategic alliance with Energy Fuels, the top uranium producer in the US. And we know Energy Fuels, of course, also very well, like the company. And it looks to me like now through that you have an additional or new entry even in the US uranium sector, which my feeling is getting really hot through the various government initiatives with US sourced uranium paying maybe a premium in the future and helping the industry.
Absolutely. No, and that was a transformational acquisition for us. And again, taking a step back to our strategy has always been to acquire a diversified portfolio of projects. And if you look behind me, this is the map of the world, but particularly that's a map of every uranium project and resource in the world. And it's really, that's the white space that we built this company around. But particularly we want to create a portfolio of projects that give people exposure to different jurisdictions. So we started off in Australia, then we went to Canada, we got a project in Argentina. And finally, most recently, as you point out, we're now entering the U.S., which is a strategic jurisdiction for the reasons you mentioned, but also the U.S. has the largest fleet of nuclear reactors in the world, so they're the biggest consumer of uranium. So it's only natural that they would want a domestic source of supply. And now we are acquiring a portfolio of projects that include past producing uranium mines, which we can turn back on very, very quickly for low capital costs when the uranium market conditions are right.
Can you specify a little bit low cost and how quickly? Not that I want to nail you on the spot. I know it's a forward-looking statement, but just that you give our viewers maybe an idea on what amounts we are talking, and would it be like the next 5 to 10 years, or do you see it faster?
Oh, it's not that long at all. So first of all, I'll give you a caveat. Once we close the acquisition, which we expect to close later this month, we will undertake proper studies to figure out the exact economics and timing. But given the nature of these projects, that they were past producing mines, they're conventional underground mines. They were in production as recently as 2011. They're on care and maintenance at the moment. So the costs and the time that it takes and the permits are ready. The permits have been maintained through that period. Energy Fuels did an amazing job.
That's super important.
Exactly, keeping them ready to go. Yeah. So we believe it's months to get them back into production, and the capital cost is an order of magnitude lower than our peers who have to build new mines and particularly build new mills. And one of the things that when we talk about the acquisition, it's not just the acquisition of the properties, Jochen, it's the strategic alliance with Energy Fuels. Energy Fuels operates the only conventional uranium mill in the US right now. And as part of our agreement with them, we have access to that mill through a toll milling agreement. So simply we can mine ore at our properties and truck it to the mill and be processing uranium in a matter of months. And again, it reduces the amount of capital that we have to spend. We don't have to build the mill. The mines have already been developed. Sure, we have to open them up again, and there'll be some more development work that we'll have to do. But again, an order of magnitude lower cost than it would be if you were doing this from scratch.
Fantastic. And I could also imagine it's not only time saving and money saving, but it is also for you like a win-win situation, because I could imagine that Energy Fuels has still a lot of spare capacity, right? And so you could do the toll milling, filling up their mill, but you must not build it. So the question of this would be, what is then your incentive price that you really can start? I mean, today at $40, given the fact with conventional underground mining, I think, I don't know what your cost might be per pound, but probably $25, $30 a little bit too low for that, right?
So again, we're going to complete proper economic studies. And so when I see you after those studies, I'll give you the exact numbers. I would say that we still need to see the price for higher than where it is today to turn them on. One thing I will say is that two of the past producing mines also have quite a high vanadium content to them as well, relative to the uranium. And in fact, with the price of vanadium right now at over $9 a pound, up from $5 earlier on in the year, and where uranium's gone, the contained value of that ore on that basis is a lot higher than we assumed when we first entered into the transaction with them. And potentially we could be getting close at today's prices to something that would make sense to turn some of the mines on. And of course the White Mesa mill, owned by Energy Fuels, not only processes uranium but also has a vanadium circuit, because they're commonly found together in the Colorado plateau where these assets are.
Fantastic. Wow, that sounds like a game plan, I would say. Like it. Because I'm a shareholder of your company also, I should say this for disclosure reasons.
No, so why?
And I'm a happy shareholder, to be honest. I also saw that you are paying $2 million at the closing, which you said is expected quite soon. 6 million Canadian dollars of deferred cash payable over time, and $5 million of deferred cash payable on commencement of commercial production. So what is the cash situation of the company? Do you need to raise more cash to fulfill all that?
So we do not need to raise any more money. And that's an important part of the consideration for the sellers of the Matoush project and of Energy Fuels. When they entered into the transaction with us, they wanted to know that we had the cash to complete the transaction. Right now, we're sitting at just under $20 million of working capital, so that's our cash. Plus, we have equity. We have shares of NextGen that we own right now, about 280,000 shares, which has, of course, done very well, and we're a very happy holder of those shares. But all that is to say is that we have the cash and the assets to pay for the closing of the Energy Fuels transaction, and even those deferred payments that you referenced, the $6 million over 3 years for Energy Fuels, the $5 million that you're talking about, the contingent payments, those are tied to production, and we would even have that money as well now.
Super. And so Energy Fuels also will be then a large shareholder of your company, and I think Mark Chalmers will also be getting a board seat, right?
Correct, and we couldn't be more excited about that. I've known Mark since 2006. Obviously, an industry veteran, knows the uranium space inside and out, and will bring a lot of that knowledge to the board of the company. And will be integral in helping to direct our strategy, particularly in the US as we go forward, because we're not done.
Super, fantastic. Like to hear that. So let's talk a little bit about uranium markets. What is your view? Why did it come all of a sudden now that uranium went over $40? What do you think are the reasons? Just your personal opinion, please.
Look, I think it's very simple, Jochen, and in fact, I was reading one of the industry pricing groups report from last night, and it's the Sprott Physical Uranium Trust, and so this has been something that has been on the horizon that people have been talking about as a catalyst, but it's actually happening right now. And effectively, what's happening for the audience, if they're not already aware of this, is Uranium Participation, which was the physical fund, has been around for quite some time, buying and holding uranium as a proxy for owning uranium, because it's very difficult for individual investors to own uranium themselves, has been taken over by Sprott and turned into a trust. And as part of that, Sprott has reinvigorated the model, and through a financing methodology known as an at-the-market offering, they've been able to raise capital very quickly into the business and immediately deploy it into buying spot material. And they're doing it almost on a daily basis now, and moving the price every day. In fact, I think it moved up about $5.25 over the last week. That was one of the top 5 biggest weekly moves the uranium price has ever seen. And I don't see there's any stopping this vehicle from going out and acquiring millions and millions of additional pounds in in very short order as it continues to get a lot of attention in the market, raise this money under this ATM facility, and go buy spot material every day.
It reminds me a little bit on the situation 2006 and 7, because if I remember that correct, I was already also in the market there. That some hedge funds started to buy uranium, and now it is a physical fund, and several other funds already did that before. And I mean, even a company like Uranium Energy is buying physical uranium, which is amazing. And so I think the market is shrinking and shrinking and shrinking. Could it happen that the buyers of the utilities are getting slowly but surely nervous?
I think that's exactly what's happening, Jochen. I think you've nailed it on the head there. I think because one of the difference between the hedge funds buying back then versus the Sprott Physical Uranium Trust buying now is there's no upper limit to how much money really Sprott can raise to go and buy physical material, whereas the hedge funds would have had a limited amount of capital that they could deploy to that strategy, and their strategy was to go long the equities and then buy up the material in small amounts in order to bring in order to move the value of the equity ownership that they had. Sprott's a completely different model. They're about buying and holding as much physical uranium as they possibly can. So I think that they could really do something extraordinary here, and then light a fire, as you say, under the utilities who are on the sidelines, wondering what's happening, starting to figure it out. And of course, there's a lot more attention in the media to what's going on, and then they'll have to figure out what their strategy is. One of the things that we've been talking about for years is about long-term contracting by utilities. When that starts, that will really kickstart the market again. That hasn't happened, and now with the move in spot price, it may just see those players come back to the table and in a fearful fashion try to secure supply, and who knows where price could go if we get into that scenario.
That's right. And we should not forget that over 50, I think still 51 nuclear power plants alone in China until 2030 will go online in addition. So that's also a nice demand, I would say.
No, 100%. I mean, the dynamics both between the demand that's coming that we know about, the small modular reactor work that's happening, everything that we're talking about in terms of nuclear's role as a source of low carbon power on the one side, on the demand side, and then on the supply side, we've had underinvestment, restricted supply of uranium, and this is what we've been waiting for, these two factors to converge. And I think maybe it's just what's happening with the Sprott Physical Uranium Trust is sort of catalyzing those two kind of supply and demand dynamics.
Super. Great. Thank you very much, Phil, for that, now long interview, really. We thought about a short update, but it's always good talking to you. Thank you very much for the insights into your company. I think you guys are doing everything the right way. That's how it should be. And I think your share price appreciation gives you the fulfillment of your strategy. And I have a good feeling that that price will move much, much higher. And we look forward to some news coming up, and wish you all the best. And it looks like we are starting to live in a perfect uranium world.
It feels that way. I'm looking forward to a fun ride.
Super. Me too. Thank you very much, Phil. All the best.
Thanks, Jochen. Bye.
Thank you. Ladies and gentlemen, that was Phil Williams, the CEO of Consolidated Uranium. And you heard it, Matoush, the closing comes very soon. And also with Energy Fuels, I think this strategic alliance is wonderful. Company has over $20 million in cash plus next-gen shares. So they are well cashed up to really fulfill all the payments. And what I really especially like with the Energy Fuels agreement that they have acquired like 3 past-producing mines, and it would only take months to really bring them back into production. So Consolidated Uranium can really react very fast when this uranium price appreciation will move on. And we are very convinced that this will happen. So I would suggest have a very close look on those shares. They are still quite cheap to have, and probably you will never get them cheaper because uranium is moving. Thanks for watching us, and bye-bye from Switzerland.